Hi, David here, CEO and founder of the Freedom Founders Mastermind. I'm reading an article from 2 days ago in the Wall Street Journal, and the title is Bullish Investors Are Piling Back In to Stock and Bond Funds after 2 years of really taking what I call higher ground. Investors have been pushed and pulled over the last several years. We had this great run from coming out of the great financial crisis back in 2008, 9, 10, 11, starting about 2011, 2012. Of course, the Fed dropped interest rates to all-time lows, held them there, and allowed for asset bubbles on tangible assets and financial assets to just really go through the roof over the last 13, 14, 15 years. We hit COVID in 2020 and saw that quick dip, but then again, the Fed comes to the rescue, as they typically have done in the past, and pushes the markets back up again. Everybody feels good again. People are still a bit skittish, though, in 2022 when the financial markets, took a pretty sizable correction and money stopped flowing into these stock and bond funds. Where do they go? Money market funds, typically, treasuries. Investors have to be careful and watch where their money goes. You probably did the same thing. You probably got a little bit skittish and maybe just wondered what's going to happen in the economy. Things took back up again late last year and into the first quarter. So far this year, the financial markets are back up again, and all this money is coming back into what I call risk-on assets. Risk-on just means you're putting your money in assets that typically do well and grow well when the economy is on a bull run, like it has been predominantly since 2008 great financial crisis. But we all know the market cycles. We know that, but do we believe it? Look, we're all humans, and the financial markets particularly are based tremendously on consumer or investor sentiment, the momentum of the market. Because those markets, the financial markets, stocks, bonds, mutual funds, ETFs, they're so fungible. You can exchange in and out. They're liquid. So that means investors can make decisions like that, and the market moves very, very quickly. Not so much in hard assets or tangible assets like real estate, perhaps, that you look at that and say, well, real estate is also got some risk on it, but also it doesn't move as quickly. It's slower to move. You've just got to be careful which one you go into. My point is this: where are we really in the market cycle? Where are you in your risk on or risk off? It's hard not to want to be part of the group, the herd mentality, who's jumping on too many times late cycle, and we see it all the time. If you're buying in now, heavily buying in now in any asset class, if you're buying into the equity side, the risk-on side, the one that we typically want to ride to the moon, if you're buying in now, your basis, your cost going in is at all-time highs. I mean, across the board. Stocks are way overvalued at the highest decile that they've been in years. So the asymmetric risk of having those markets correct while you bought in up here is huge right now. I'm not giving you financial advice. I'm not a financial advisor. I'm just telling you to live your life and have true freedom. Many times you have to do the hard thing, and that is move away from the group, the herd. It's what I call contrarian thinking. It's tough to do because when everybody else is doing this and you say you're doing this, people will wag their finger and say, oh, you're missing out. Why would you do that? You've got to stay in the market. You've got to buy and hold for the long term. I think that's a big mistake, particularly in the times we are in right now. The Fed, the monetary policies, the fiscal policies are not real. What I mean by that is we're kicking the can down the road. The massive debt that this country is taking on, public government debt, corporate debt, consumer debt, this is a train wreck that's ready to happen. And if you're at all like me, you're thinking, I don't want to be on that train. But it's hard not to be with everybody else, isn't it? There's ways that you can place your money and keep it much safer than the game that most people are playing. But it's anti-traditional. If you're an anti-traditionalist, you want some help with that, I've got a plan that I've worked on myself, got myself to freedom over the last 4 decades. I've watched these cycles. I've been involved in these cycles. I've seen how they work. And mitigating the risk is something you can do. But you've got to be committed and convicted that you want to do it and not just follow that herd mentality. Follow me. I'd love to help you. I've got a game plan that's helped hundreds of other doctors and dentists get their freedom path straight going forward and not be caught up in the exuberance and irrationality of the markets that are there today. Thanks for watching. If you're interested in learning how to invest safely and profitably during any economy, any market cycle, whether it's up, down, good or bad, then just download my free report, the Full Cycle Investing Report, below. There's been a lot of past cycle investors who have profited immensely, made great gains in the last 15 years during the bull market we've had. However, the markets are changing. They always do. There's going to be a day of reckoning. You can either be prepared, take advantage of the opportunities and protect your wealth, or put your head in the sand and do like so many other people, wonder what happened. If you'd like to be on the front edge of the things that are coming in the future, just download my free report, the Full Cycle Investing Report, in the description below.